Continues does the stock gauntlet. Next up, we're going to be talking about Tesla, ticker symbol TSLA. We'll be looking at the weekly here and the daily. We are going to be talking about my high five setup that we're going to go over and how we are bullish on all indicators. And at the end of the video, we're going to go through my valuation analyzer to see what my fair value, what it's kicking out to me as a fair value for its this kind of cash flow and other valuation indicators. So I'll be honest, in my trading and charting career, I don't think I've ever seen something as beautiful as this. So as you can see here on your chart, um, we have this massive shoulder, head, and second shoulder for a massive 3-year, dating back to 2021 highs, massive 3-year inverse head and shoulders, while subsequently having a 1 year, almost 2 years, um, inverse head and or sorry, 1 year inverse head and shoulders within the right shoulder of the 3-year inverse head and shoulder with a massive breakout. As we zoom in here, a massive breakout last or 2 weeks ago to a retest last week to now a continuation higher. So breakout, retest, higher after the confirmation. Just a thing of beauty. And the measured moves are absolutely insane. And this is why I've been calling out Tesla since July and having a price target of $300 by end of year, which we're sitting at $287, almost $288 right now. And it's November, so I still have 2 months to hit my price target, which I think we will be doing. So since I've given out this name back in July, we are up a staggering 30+%. But enough of that. Let's get into my high five setup, valuation, and where I think this is going with price targets. Also, where I'm sitting at now, I'm in Tesla in my long-term portfolio, and that's my no touch. I'm not trading that. I'm holding that for the long run. I believe in Tesla with their robotics, autonomous driving, FSD, so on and so forth. And I think all of their other businesses will outgrow and outperform their EVs eventually. So that's my bullish standpoint on it. As far as trading, I do have some options sprinkled into throughout next year and some leaps as well. So very bullish, been very bullish, up very nicely on my options on this name. Like I said, share wise, I'm not trading this name. I'm holding for the long term. But let's get into the high five setup. So it's still a high five setup, and it has been a very rewarding high five setup. So we have our, like I said, our charting pattern, which is the first of the 5 of the high five setup. Next is going to be a volume shelf with a volume gap of some sort. You see we are storming up here quickly to fill this volume gap on the volume profile up to about $334 to $335 right here, which is just beautiful. I think we're going to get there pretty quickly. The measured move on the first inverse head and shoulders, the 1 year, is dated to February 2026 and has a price target of almost $428. The massive 3-year inverse head and shoulder has a massive measured move up to $581 and some change for 116% move. Probably 100% move, a little over 100% move now from where it's at currently. So yeah, 101% move from where it's at currently. And so it's funny. So the 1-year inverse head and shoulders aligns perfectly kind of with this peak back in 2021 that we had. So when you have these breakouts, the common saying is look left, and that's where your first profit target should be. So we look left on our inverse head and shoulders or our first one, looking back at our all-time highs at $427. The $335 right in the middle is going to be our first price target due to our volume gap fill. So we got 2 charting patterns. We have a volume profile gap and then another gap after the $334 price target. Furthermore, we'll roll into our indicators here to see the other 3 of our 5. We have a bullish MACD on the weekly, trending higher, creating higher lows, moving upward nicely over the 0 line, bullish blue over orange. We have a nice uptrending RSI that's only at the 63.76 mark, so still plenty of room to run before we are in the overbought territory, as you see with this one over here, ran all the way up to about 86. So we have lots of room to run, and even once we're up there, we can kind of move sideways, just like we do with the trend and the Williams R. Um, Next, we see that we had this run up through the sweet spot, this nice little pullback, a buying opportunity, and now a little bit of back and forth, and now creating a higher low and continuing higher. And like I said, once we get up here, we can kind of go back and forth in this box while we continue higher on our trend. So still a high five setup, still a beautiful high five setup, if I must say. Um, we've had our pullback on um, our weekly chart here. We've had this pullback to around 31 to 32 area on our Williams R percentage. And that is going to be our fail-safe, along with one other indicator. If we do get some sort of massive pullback, it'll indicate to us to start exiting out of our to fully exit out of our options trades. But I'm also bullish on the name long term, so I'm going to be taking everything into consideration. I'm just saying, for normal trades and everything, I'm going to be taking that support line that we create, that first one, and I'm going to be creating this box, and along with the RSI, the trend, and the MACD, I'll be letting it tell me when to exit, because we are getting to a top point. So if we come over here to the daily, everything's looking amazing as well here. We can draw this box down to this first big pullback here, which was the retest area, which is a perfect support and pullback area to be at, and create your box for, because now we can kind of move sideways in here, like I always say, like a crazy person in a room, just move sideways back and forth as we continue higher in the stock price. We also have our MACD bullish, moving higher, uptrending MACD over signal line, over the 0 line, extremely bullish. We are making higher lows here on our RSI and not yet into overbought territory. And on our daily, which is our shorter term, so weekly or 1 month out typically, on our on that daily trend, we are in the sweet spot, crossing higher and moving to the upside, meaning this move is just getting started. And I highly believe that we will be at $300 here before the end of November. And my target was for the end of 2024. So, and that target was put out in July. So if you want to look at where we were in July, we were at about $225. So massive move. Like I said, we were up over 30%, and we're going to continue to climb higher, in my opinion. You see the price points, you see the profit, you see the targets, you see the measured moves, you see the timeline. Timeline on the first inverse head and shoulder is going to be February 2026. Which we could get there a lot faster, guys. This is just a timeline. You just measure the timeline and say, okay, if I'm going to play options, this is the timeline I want to play it around, right? Or the massive 3-year inverse head and shoulders is going to be obviously around 3 years out, which is 2027 for that 581 price target, which we get to 581, in 2-3 years. I mean, you're doubling your money here, even more. So just massive moves here, locked and loaded for Tesla. Now let's get into my valuation analyzer. If you want to stick around for this, this stock is a 1 of 6 score. But if you don't understand by now, that right now is the hardest point to really try to understand and value Tesla and their company, because they've had such a massive dip in the EV markets, and you had the China headwinds, you had the inflation headwinds, you had the high interest rate headwinds, you had all these headwinds that are now becoming tailwinds alongside someone's Elon Musk's BFF, just one president. And not saying that he's going to get like favoritism or anything like that, but this guy's probably going to be in government and trying to do policy and stuff. So yeah, it's definitely all really bullish. You need to take everything into consideration here, and the fact that all their numbers are really jacked up right now. Revenues are continuing higher, obviously, but their numbers are just jacked up on a margin standpoint and everything like that. But what did we learn from last quarter? We learned that margins have bottomed, and that we are climbing higher now. And a lot of their other businesses, like their energy business, eventually their robotics, and their FSD and autonomous vehicles and the robo taxis and all the futuristic stuff, and how Elon Musk has just proven himself over and over and over again to constantly win, beat shorts, beat anybody that doubts him, and arguably, love him or hate him, arguably he is one of, if not the greatest entrepreneur and businessman of our lifetime. You can hate on him, but there's no way that he's not in that category for you. If he's not, then you're not thinking logically and looking at what he's done um objectively, right? So the free cash flow yield and your PE, they're junk. I'll just be honest. They're junk. Your PEG ratio isn't that great either because they had a down year for EPS. But if we look at the cash flow this company is bringing in, especially last quarter's cash flow was phenomenal. If we look at it on the discounted free cash flow model, which is mainly what this analyzer is about. Really, all this stuff right here is your valuation analyzer tool, or your discounted free cash flow valuation model. I take um, most of my strategy from that, and most of my investment thesis from that, with these being additions, while also just understanding the company, reading 10Ks, reading 10Qs, and understanding them at a deep level, and understanding where they're going, the growth, and making my own assumptions as well, like I do with the growth rates. Like I have them kicking back up to 30% by 2030 because of the robots and the cyber trucks, or sorry, the cyber cabs, and so on and so forth, in the energy business, services business, so on and so forth. So you can make your own assumptions, but I have a fair value, intrinsic value, meaning that this is what the company, in my opinion, should be priced at today. And then from that point, it can obviously become overvalued at that point, where it climbs up to, as we see over here, where I would trim a position possibly if it got to like 500 and some dollars with these numbers. If it got to 500 and some dollars with these numbers, yeah, I'll take half my position out, because we saw in 2021, huge run up, huge pullback, and then you could have bought more in here. So that's what I do here, right? Have my margin of safety. I'll be buying in here more and more as it comes down. And then I have my margin of risk, which is where we're at, like with Palantir right now, where we're about 30% margin of risk with overvalued with Palantir. And I've trimmed about 30% of my position. And I just play this game back and forth. I don't see it as timing the market. I see it as having a strategy towards the market. And I'm confident in this strategy. I'm confident where I'm at. And if something like Palantir, I trim 30% and it keeps flying higher, and I do end up exiting 100% of my position, and it never pulls back, so be it. I'm gonna stick to my strategy with trading. I'm gonna stick to my strategy with investing. You all need to stick to your strategies, or follow a strategy, and have the utmost confidence in said strategy. If you don't, with investing or trading, you will never be successful. I'm sorry to be so blunt, but it is just the facts. So um, that's where I'm at on the valuation analyzer tool as well. Assign a 30 terminal PE, meaning after in 2033 having a 30 free cash flow multiple on this company, 8% free cash flow margin rate, which they're doing now, even with tough times over the next 5 years, which that could be higher. Again, when I do these two, I'm very conservative with my numbers. I can go more bullish with it, obviously, if I punch in 30% per year, and then I punched in, let's say, they get to, with all the technology and services and stuff, they get to 15% this 5 years, and then they get all the way up to 30%. over the last 5 years, then you're talking about 637, right? So it's always important and to be a little bit more to not be so optimistic when you're valuing a company. So as of right now, we would have a 12% annual CAGR, which beats the market handedly, and then for the next 10 years, and then a 14% annual CAGR, beating the market handedly over the next 5 years. So that's my fundamental and my uh, technical analysis using my high five setup trading strategy, and also using my valuation analyzer investing strategy on Tesla. This was longer than the rest, but when you're talking about Tesla, especially someone like me who's a fanboy, I'm never gonna not talk for a decent bit on Tesla. So if you enjoyed this video, drop a comment below. If you hold Tesla shares, whether you're trading them options, you're trading the shares, or you're a long-term bull and investor on this company, drop a comment below, hit the like button, share with others that are likewise and fellow shareholders of this great company and a great person, I believe, in Elon Musk, who's trying to make the world a better place when he's so hated. But whatever, I'm not going to get into that. So appreciate it, everybody. Hope you have a great rest of your day, and stay tuned for number 5 of 17 in the stock gauntlet. It's going to be Salesforce. See you in the next one.